Clearly, what we think is that coronavirus is going to be an additional source of headwind for Latin America in 2020. We're already seeing a very mild economic recovery in Latin America, and that could be further challenged by the spread of coronavirus. So far, we've not seen a huge impact because we have not yet seen a significant increase in number of cases in Latin America. The channels of transmission are really going to come from slower growth in China, as well as volatility and decline in commodity prices. Furthermore, if we see a continuous and persistent spread, this is going to be affecting the region through a hit to confidence and a volatility in international financial markets. We don't anticipate reduced trade frictions between US and China through the Phase 1 deal or the USMCA significantly improving Latin America's growth prospects in the near term. We do expect that despite the Phase 1 deal, China's growth is going to slow at this point in time. Now, over the medium term, clearly, if we see a persistent decline in trade uncertainties between US and China, that would be helpful backdrop for Latin America. We see that Latin America's average growth, excluding Venezuela, is going to be still very mild. We are talking about just 1.7% growth this year compared to about 0.7% last year. And most of the economic recovery is going to be led by recoveries in the larger economies such as Mexico and Brazil. We expect growth in Mexico to only go up to 1% compared to 0% or so last year. We expect Brazil's growth to be about 2% compared to 1% last year. So still a fairly mild economic recovery in some of the large economies in Latin America. In terms of positive performers, we are expecting Colombia to be growing north of 3%. We're also expecting smaller countries like Dominican Republic as well as Panama. These countries are also going to perform relatively well. Clearly, the countries that are not going to do well is going to be Argentina, where we expect negative numbers in terms of GDP to continue into 2020. Much in Argentina really will depend in terms of the debt restructuring, both the kind perhaps, but also the duration of negotiations with investors in order to conclude the debt restructuring in Argentina. We expect sovereign ratings in Latin America to have a negative bias in 2020. We have about 7 countries of the 19 countries that we cover on negative outlook. So close to 40% of our portfolio is on negative outlook at this point in time. Why is that? We think there are 3 main reasons. First, the economic recovery in the region continues to be very sluggish. The second reason is that because of sluggish growth, as well as several other factors, we are seeing a very difficult and challenging times ahead in terms of fiscal consolidation. 2/3 of the countries in our portfolio are going to see debt increases in 2020. And finally, we also see political risks in the region. We obviously have seen policy and reform uncertainties in the past, but now social unrest in the region is adding another layer and dimension to political risk in the region.